I began by asking, tell us the narrative of what happened and when to bring Bob Iger back from sort of the executive chairman role into a real CEO and operating role. What happened?
Well, Iger had this just remarkable 15-year run, and the end of last year was basically a victory tour. He published an autobiography. He was Times, Businessman of the Year, and he started talking to his board about calling it quits, leaving with the launch of Disney Plus as a high note. And end of January, they really make that plan, announce it, just where your stock chart starts to go off the cliff in February. This is after they've had to close their park in Shanghai, but and after you've started to see the market move, but he hands off the reins to Bob Chapek, a much lower profile figure who has run parks to date, and then tried to step back for a couple of weeks. His goal was to, work on TV shows and movies and do the fun stuff and let Chapek operate the company and grow into the role. About 3 weeks of that, and I think the depth of the crisis became clear, and Iger has really stepped back in. And I think is really thinking a lot about, in particular, Disney emerging from this as a pretty changed company, not just turning on the lights, not just reopening the parks, but thinking about how you reopen parks with, lots of thermometers outside, and how you open the company with less real estate and fewer employees.
Well, you've got a company that has probably in the perfect storm of businesses. They've got parks, they've got cruises, they've got theatrical releases, all of which is basically literally dead in the water right now. You described this as Disney fighting for its life. My initial reaction was, how can that be? This is one of the fortress companies in America. Now, obviously, their revenues have basically dried up here, and that's no place you'd like to be. But is it really that dire that this company is fighting for its life?
Yeah, I think all of the things that made them this incredibly strong company, which was this ability to export IP into all these real-life experiences, has made them incredibly vulnerable to this pandemic. That said, they were able to borrow $6 billion at the end of last month with ease. I think everybody thinks that when the movie theaters reopen, people are going to be going to Disney movies. Whenever if anybody ever wants to go on a cruise line again, Disney's sort of safe, trusted brand will make it likely to be a Disney cruise.
Mm-hmm. And, of course, ESPN announcing early today that they're going to bring forth some pay cuts. I'm sure Stephen A. Smith can get by with $8 million as opposed to $10 million. But what does the idea that this crown jewel of their broadcast properties is asking people to do pay cuts? And, of course, ESPN is coming into a round of bidding for NFL rights here over the next 12 months or so.
Yeah, if ever there was a TV business that seems totally unassailable, ESPN with rights to most of the important sports events for Americans is, obviously the one. It would be hard to think of anything that would shut ESPN down. The pandemic is it. And so it's a real, they're playing there. You can go onto ESPN now to watch athletes play video games with each other. Huge problem for them. Again, like much of the rest of Disney, you assume people are at some point going to watch basketball again and come back to ESPN. But right now it's just this, hitting the brakes just unbelievably hard for that company.
Yeah. And, of course, they do have, however, this eagerly anticipated Chicago Bulls Michael Jordan documentary that they've moved up. I believe it debuts on Friday. Ben Smith, thank you very much. And I commend the article if you have not read it in today's New York Times.